Vacation rentals have produced some of the highest real estate returns in recent history. Everyone's jumping on board. In fact, Airbnb has come out this year and said that they are up 17% year over year on listings or houses that have come online on the platform. Looking into AirDNA, they said as an industry whole, it's up 23%. That's a lot more houses to choose from when you jump on these websites, which means more competition. But the returns must be good, and they are. There's the proof in the pudding. I have made really good money doing vacation rentals. Some of my friends have made really good money and continue to do so. Lots of times making well over 12% cash on cash return. There are some great investments out there. Now, let me take you back to when I was in college. Well, real quick before that, don't forget, like and subscribe, hit the notification bell. But come back with me in time. I'm going to college, I'm in a business class, and my assignment is to create a business, explain how it makes money, and put all the parts together and present it to the class. So of course, my business has to deal with real estate. I had to decide what problems did I want to solve. With me getting into real estate at that age, I didn't have very much money, so I needed to be cheap. 2, I just wanted everyone to be able to get into real estate earlier without the restrictions and without having to learn all the stuff. I felt like I was being held back. So what did I create? I wrote a whole plan and I came up with crowdfunding before it existed. So yeah, pretty much I'm super smart, came up with.
Oh, brother, this guy stinks!
No, I don't get credit for it. And obviously it wasn't developed to the level it needed to. But my business, I wrote it up as they would go out and they would find property, buy them, and allow people to buy shares, small shares of ownership, where they could get cash flow from it, they could share in the appreciation, the tax benefits, every good thing that I wanted from real estate, I was gonna allow others to have at a fraction of the cost, to their percentage, which is basically crowdfunding. So come back with me to today, and that has now been out for a long time. Not necessarily my version, but crowdfunding as a whole across all the different industries, including real estate. One of these companies that uses crowdfunding to buy real estate is called Here.co. Now there's others like it, but this is one of the newer ones on the market. And so we're gonna use it as an example. They specialize in vacation rentals. So they go out and they acquire the property, they buy it with a new LLC that only holds that one property, and then they turn it around and they offer people to be able to buy in with as little as $100. Check that box that I wanted back in college. I would have been able to invest so much earlier without a lot of money and doing what I felt like the rich were able to do. And then you would own a percentage of that LLC, thereby the house. And then you get the benefits of appreciation, cash flow, tax advantages, everything that you would get if you went and tried to buy it on your own. And then you sit back and relax and watch the cash flow come in. Life must be great. So in that case, it's a lot like stocks. You're gonna analyze before, do your research and hard work, then you're gonna buy it and then sit back and wait. Buy it, set it, and forget it. Now, a lot of times in stocks, you're gonna check it every day, see how it's doing. Same thing, you're gonna see, hey, how's my cash flow doing? Because as the guests come in, seasonality is gonna play a factor. You can watch all of that. So I think for a lot of people, it's gonna be about diversification. Don't want everything in stocks, so now you wanna kind of buy a little bit more real estate and now maybe take advantage of some of the vacation rental options that are out there without having to run them all yourself. Now, before you run out there and go spend $100,000 or whatever you wanted to with Here.co or some other company, you need to know how they make money. They make money in 3 ways. The first way is property management. If you were gonna go buy an Airbnb, do it yourself, you could do everything yourself and make the most money. Most people though don't have the time and energy or money to do that, so they outsource to a property management company to make sure all of that happens. And typically those property management companies are gonna charge you 20 to 30%. So let's say 25%. Here.co charges 25% to do the same thing. They manage, they do all of that. So I think it's more or less a fair amount. However, my only gripe really is that they're gonna have a lot of properties that they're doing this with. So they very easily could make it more of a volume discounted rate than 25%. I felt like if I kept buying more and more, I would go renegotiate with the property manager that I would have hired to get lower than 25%. But they are adding value and they're taking that energy and effort and work away from you, so you should be paying for that. So they are a property management company. That's the first way they make money. Secondly, they actually own 1% of every property that they buy, which means they also get appreciation when it sells. And based on whatever amount of money you put in, you're gonna get proportionally company a payout when they sell the property as well, the appreciation. So it does help them align with your goals since they have a reason for it to be well maintained, well taken care of, and to sell for as much money. However, I do think 1% is a little bit low because fast forward to when they own a bunch of different properties, why would they care about just 1% of a property over here when they have hundreds of other ones going on? Maybe that should be a little bit higher. And number 3, they're actually going to make money from what they call asset management, which is different. Don't confuse it with the property management. The property management was the day-to-day, taking care of the guests. Your asset management is just that, the assets that you hold. They had to go out and find the property. They had to get it ready. They had to fix things. They have to make sure the website works, make sure investors can pay money and they get their money back. A lot of this is paying for all the wheels that need to be turning for the company. And they charge 0.25% a quarter, so it comes down to about 1% a year of the total valuation of the property. So as that property goes up, they will make more money annually. Now the way you get paid is after all of that. Now, we did mention, of course, you make money on appreciation, but you also get cash flow coming in. So they're gonna take the rent minus all these expenses, including their expenses, and then they'll get to their bottom line. And you will collect what percentage that you currently own.
So you get nothing. You lose. Good day, sir.
So you can get cash flow and appreciation. And talk to your CPA because you should be able to get tax advantages as well. So all in all, it's pretty much exactly what I came up with when I was in college. No, but it is different in all fairness. But as I said, it's pretty close to stocks. They don't require anything from you, just a set it and forget it mindset. But that also means you lose control. You can't make your investment make more money. You can't tweak it. You can't work harder. You can't try this or that. You literally invest your money and wait for the returns to come in. And with that said, there are some obvious differences than stocks and owning real estate or through here.co. With stocks, you own a piece of the whole company, not just a division that's developing something unique. So if the company as a whole is making money and going up in value, your stock becomes more valuable. If you go buy a second stock, they're worth exactly the same amount of money. They both go up or down. When it comes to properties, every property is unique. Hence the location, location, location saying when you buy a property. So you actually might have a completely different experience buying one property than another, even through here.co. They're trying to systemize it, but you might get different amount of guests, how much you can charge per night. There are lots and lots of factors with each house. So they are not worth the same. So you need to analyze these different deals accordingly. Also, they're in a completely different asset class, right? When you own stock, that's a paper asset is what they call it. You're owning part of that business. However, in this case with here.co, you are owning real estate and you get those benefits that I spoke about. I have 2 main concerns though when it comes to this type of business. Just because there's benefits doesn't mean that there's not issues. My first main concern is the industry as a whole. It has been going up and up and up, and you never know when that might slow down or stop. We are, like I already said, seeing some evidence of increased vacancy and so many extra properties on the market that I think some people, if not most people, are going to be making less from their Airbnb this year than they did last year. And in further detail that I read, they're expecting about a 9% growth still of additional listings this year, with only about a 5% growth in demand. So should get a little bit worse this year than it was last year. Now, what if it does go sour? How is here.co handling that? If I buy a property, I'm gonna underwrite that property as a long-term rental as a backup, and then I will choose to run it as a vacation rental to make more money. If things go south or regulation changes or anything like that, I'll just switch back to a long-term rental and make a little bit less money, but still profitable and don't put the house at risk. However, what is here.co going to do? These properties are specifically short-term rentals. If that's all they specialize in, I don't know if they're gonna offer something like that. So if something goes wrong, there's nothing that you personally can do to leverage it and change strategies and make sure that it's always profitable. You will have to abide with whatever here.co decides to do. So you have given up some control. So that is my main first concern. And my second one is similar but a little bit different. is when it comes to the management. What if it's just ran poorly? The real estate itself might be great, but what if it's not being managed properly? Or the economy is crashing, or what if your vacancy rate is getting too high for other reasons outside of the economy and you don't like it, the value has gone down, and now what? Your only option is to get out. But the property's worth less, so you've lost part of your money. Your return's not doing very hot because it's not doing good, and so you're forced to sell. Now, I don't know exactly what it entails to sell and how fast can you sell. Do you have to wait for a buyer to come? You might be stuck selling at a loss if it were to drop low enough. And I always say you need to be in control of when you buy and when you sell to always prevent a loss. Here.co does have the right to sell any one of the properties that they want whenever they want. I'm just trying to point out that it is a control versus passive and return on the scale. If you owned it yourself, you could pivot. So that's my second concern, is you're giving up control. In my world, I think this is a great option for those looking for diversity, that want to get started early into real estate and start getting a decent return and actually own some real estate. I would recommend, maybe whether it be Here.co or something else similar to it, but I would strongly consider it. For myself, however, I will not be investing in Here.co because of that same scale reason. I am looking for something that's active, that I can leverage my knowledge, my connection, my relationships with to get us an even higher return. So hopefully sharing this information with you and what I would do helps you figure out what you want to do. Don't forget, like and subscribe, hit the notification bell, and leave me a comment down below. I really want to know, would you invest in something like Here.co or one of their competitors? Or what about crowdsourcing, crowdfunding? Do you like it? Do you hate it? Let me know in the comments down below. Until the next video, peace out.